Bring that beat back one more time. What's up, everybody? Let's get into it. Sometimes you just gotta let that beat ride for a minute, though. Like, okay, all right, we back. What's up, everybody? Thanks for tuning in to the live stream. YouTube is representing, so let me know where you're watching from in the comments, both platform and location. We can see the YouTubes is checking in. Let me just check something real quick, see if my comments to pop up on the screen are working, and they are. We're here. We're back. We're back. So JD Gleck says he was the first one here. Welcome, Philip. Let's go. Tanisha Towns is in the building. My man Terry say what's happening. Tyler Dow watching on the YouTubes from Seattle. Thanks for tuning in. Cassandra, welcome to the party. S. Dot and Rita. Is there a site for the merch? My wife actually quoted that today after the trade. We could have made more, but held on to it. But she's no longer encouraging. Oh, the You Never Go Broke taking a profit? Yes. Let me drop a link in the chat so that you can check out the merch, which is really cool. I really like our merchandise in our store. So let me drop it in the chat. Give me 1 second here. And ooh, I don't know if I know how to drop it in the chat. Yes, I do. Let me head over to YouTube. So I'll drop that into the chat on YouTube. So thanks for asking. Hugo, welcome to the party from STL. AI, DMV, Jamil, welcome to the party. So give me 2 seconds, guys. I'm going to drop that merch link in the chat, and you'll see that in about 2, 3, 1. Bam. I just dropped our Shopify link in the chat, and I just pinned it, at least on YouTube I did. So if you're on any other platform, you won't be able to see it. Houston in the building. Welcome. Welcome. Yeah, y'all got to get down with the I Never Go Broke taking a profit shirt. So there's the link. I also pop it up here on the screen. You can see it right there. There is the link, and you can always watch the replay, come back and see it. Red Man from Florida in the house. So welcome, guys. Welcome to the live stream. So what we want to talk about today is I wanted to, number one, I'm challenging myself to drop a video every single day, or at least 5 days a week. So that's 20 videos a month, because I really want to engage more on live, talk about the market, make sure that this is a place that you can come and feel like you can get reliable information on the stock market and be in tune with what's going on outside of what we do inside of Power Trades University with our members, where we look for specific trades, option strategies, have our monthly Q&As and all that stuff. So today we're going live, and we're going to be talking about, we're going to be looking at I'm going to pull up the charts here. We're going to look at 2022, talk about what happened, and then really look at where we're going in 2023. Because this world of investing can be kind of scary, and the news will do what they do, which is, you ever heard the term FUD, where they spread FUD? Have you ever heard that term? It's called fear, uncertainty, and doubt. And the news is pretty good at spreading fear, uncertainty, and doubt. And so I want to come in here and just kind of break down, what should we be scared of, what should we be uncertain of, and what should we be doubting, if anything, for that matter. So that's what we're going to do. So let's head over to the charts. By the way, if you have a question about a stock, the market, mindset, anything like that, go ahead and drop it in the comments. And when we get to that portion, we'll answer your questions as well. So let's go ahead and switch over and let's look at the charts. Let's go here. All right, so I wanted to start by looking at the S&P 500. So the S&P 500, as you guys know, it's an index that measures the overall market. But I want to go back. And I want to look at a few things here with respect to the S&P 500. So if you look back here, right about where my head is at, everyone knows what happened right here. This is where the pandemic hit. And so this is where life, I'm going to draw another arrow here. I want to draw a green arrow. And this was life before the pandemic. Okay. This was life before the pandemic. Then the pandemic hit. And then we got this huge sell-off, right? Rightfully so, because the market was closed. We have, here, let me bring this up this way. And rightfully so, because the market, let me switch and do it like this. Give me 1 second here. I want to have multiple opportunities to talk to you guys in different views here. And so the market itself in 2022, Nicole Sessa, we will talk about Tesla. So thank you for bringing that up. Here, we'll talk about Tesla. So the market sold off when the pandemic hit, and rightfully so, because guess what? We're like, we don't know what's going to happen. Everybody's freaking out. The world is literally shut down. So it makes sense that the world shut down and we freak out. And when we freaked out, for lack of better terms, we sold everything. We're like, we don't know how long we're going to be shut down, how long stuff is going to be stuck on ships in China, because everything was just shut down. So we got this massive sell-off that you see right here. We got this massive sell-off. Then it's like everything's going to be okay. We're going to pause people's student loans, rent. We're going to give out money, all this stuff. We're going to be okay. Then restaurants found out a way to make money by doing carry out. Carry out is booming, this, that, and the third. And so what happened is it led to an artificial boom. And that's with all the inflation, all the pause on student loans, the government giving out money. It led to this artificial boom. You also had a boom in tech. And the boom in tech happened because everyone went to live streaming. Everyone's stuck at home, so they probably bought Netflix. Everyone's shopping online, so Amazon boomed, right? Because you couldn't really go into the stores, and everybody felt safer, even if you could go to stores, just having them delivered to your door. So all of those reasons led towards this mega boom. We had this mega boom in 2021. All right. So now let's erase that and let's come back here. At some point, the world realized, okay, we're going to stop giving out money. We're going to start back evictions, and we're going to raise interest rates, etc. And so what you have was a reversal of the mega boom. Does that make sense? You got your mega boom. Let me just draw it out, because you got to think through this. We got to think through this, guys. We had the pandemic drop. Then we had the mega boom. And now we just have basically a reversal of the mega boom. And this is going to be important for how we think about the market going forward. Because here's why. Now that the mega boom is over, if you think about it, the boom should have never happened like this. Does that make sense? Like, this is, let's just make this blue. This is where, this is like, I'm going to put a big N here. This is normal. This N stands for normal. This is going to stand for, we're going to put a P here. This is the pandemic mega boom, or should I say, all the money that the Fed pumped into the economy. This is the Fed sucking the money out of the economy. So we'll put it here for tapering, because tapering is the word that I think the Fed is using, right? They're tapering. Like, we're slowing down buying this, we're raising interest rates, we're all this stuff. So they're tapering there. And then over here, you had, the Fed stimulus. Let's just put stimulus. Okay. You got the Fed stimulus. Boom, boom, boom. All right. So where are you going with this, Jason Brown? All right. Stick with me, guys. Glad you asked. Where are we going with this? It's pretty simple. If we snap a line right here from where things were normal before the pandemic hit, this is normal life before the pandemic at about 3,400. This is normal life. Now, this is all technical analysis. So before the pandemic hit, normal life was 3,400. We literally came down and almost hit 3,400 right here. So we were almost back to normal life, which makes sense, because if you think about it like this, we ran all the way up because of the extra stimulus and money that was pumped into the economy. Now that they're pulling it out, we kind of got sucked all the way back down. If you really think about it, we're back to normal. The question is, what does back to normal mean, Jason Brown? Because a lot of stuff happened in between there that has changed what old normal was. Now we have to evaluate what the new normal is. Does that make sense, guys? Let me know in the comments. New normal is what we have to evaluate. And so as we look forward to 2023, we can kind of remove some of the foolishness, some of the fear, the uncertainty, the doubt that everyone's pumping up with the recession and all this stuff. And we can really talk about, what does the new normal look like? And then Nicole, I did a whole video on Tesla, by the way. If you haven't seen that video, please check it out. I did a whole video on Tesla. In fact, I'll pull it up just so you guys can see on my channel. But we did a whole video on Tesla, so check that out. I'll still talk about it live because you're here live. But if you aren't part of the channel, make sure you go check out the channel, because we talked about Tesla live on the channel. But what we got to do is we have to talk about the new norm. And so let's go back to the charts. Let's look at what is the new norm, Jason Brown. Okay, so the new norm, what happened is, during the pandemic, a lot of people fled the economy, meaning like a lot of retirees retired because they realized, A, either they passed away, unfortunately, or B, they, realized like life is too short to keep working. I'm 50, 60, 70. Let me exit the workplace. So you had this mad exit of people from the workplace. Then you also had teachers who exited the workplace. Then you also had nurses and doctors who probably were just stressed out and also exited the workplace. Then you had everybody working from home. Everybody realized, I could start a business. I could work at home. I could do remote. Some of those people left the workplace, became freelancers or contractors. So it left all these job openings open. So when you think about where we're at right now, we had 2 negative quarters of GDP growth. They didn't want to call it a recession because they said there's so many job openings. Okay, so if we already had 2 negative, quarters of GDP growth, and they didn't want to call it a recession, why do they say that the real recession is coming in 2023? I don't understand what the definition of the real recession is if we just had the real recession and they didn't want to call it a real recession. Does that make sense? It doesn't make sense, actually, but it makes sense from a standpoint of, why are they calling this the real recession that's coming if we just had a real recession, but they didn't want to call it? And so how are we going to go into a recession in 2023 if there's still all these jobs, which means there is a way for people to make money? Interest rates ain't changing people's spending habits that much. If you think about it, higher interest rates is killing what? Real estate? Okay, but most people already bought a house during the pandemic. And so they locked in 3%, 4% interest rates. They're not about to move again. So yes, it's killing real estate. Second thing it might kill is like large financial purchases, right? Because if you're buying a car or something like that, you might be like, maybe I don't need to get the car. Maybe I'll hold on to the car I have, because now I'm going to be paying a higher interest rate, which means a higher monthly payment, which means higher out-of-pocket costs, which means less money spent on vacations and just things that you want. Okay, cars, Maybe vacations get tamped down a little bit. Housing gets tamped down a little bit, but you already bought a house. Outside of that, though, what else is, I mean, okay, maybe you won't buy a boat this year, right? A boat is another big purchase that you don't necessarily need. Outside of that, I believe that the federal government and the news, both of their job is to create fear. If they create fear, okay, I see we got to block somebody. I see we got to block somebody already. Hold on. Let me block this foolishness that's coming in the chat. Um, Hold on. Let me block this foolishness that I saw. Oh, it already blocked it, I think. Okay, cool. I think it already blocked that foolishness that was coming in the chat. All right. So if you think about it, okay, food costs are high. Food costs are high, but food costs ain't gonna throw you into a recession. You see what I'm saying? Like, food costs is not gonna throw you into a recession. You mean to tell me you can't afford like an extra $100, $200 for groceries, and you like that's it, everything's over. So I don't believe that food costs is gonna throw us into a recession. What I believe is happening, here's what my belief is. My belief is we already had the real recession, which is going to be reflected in the stock chart. Let's go back and take a look at it. My belief is we already had the real recession, but if we called it a recession, everybody would panic. Because think about it. If you already tightened up your spending and we hit 2 negative quarters of GDP, that's a recession. But if they say the words we're in a recession, it will freak people out. Then they really will double tighten down on their spending. So here's what I think the goal is. The goal is to have a recession and not tell people we had a recession so that they really don't freak out. Then we say the real recession is coming. If we say the real recession is coming, what do you do as a consumer? You're starting to tighten down your money you're spending now so that we could avoid an even further or deeper recession. Then once we come out of this, we're going to look back and then we're going to say the real recession happened when we had those 2 negative quarters of GDP. But it'll be okay to say that that was the real recession because we're out of it now. But they don't want to say it while we're in it because they don't want to cause panic and have you stop spending your money or get even more freaked out. That's my thought process. If you look at the chart, let's go back to the charts. Let me know. What do you think about that in the comments? If you go back to the charts and you think about it, we already stopped spending. How much more are we going to stop spending? Say, well, people might lose their jobs. Who cares if they lose their jobs? There's so many job openings. So even if they lose their job, they can go get another one. It might not be a job that they like. That's different. That's different. But they could go get a job. So I believe that the bottom has already happened. Or a version of the bottom. I believe the bottom probably was in about right here. I really do. I think the bottom was in about right here. Because remember, if we come back down to this line, which we could, we almost hit it. This was 3,500. We were only 100 points away from normal life before the pandemic, before stimulus, before inflation rate. So technically, maybe the market could come back down here, but why would the market come back down here if the economy is open, the world is open, and there's a ton of people who can get jobs? There's a ton of jobs open out there. Why would we just tank and sell off? So that's my thoughts about 2022. Let's talk about where we're going in 2023. I believe 2023, we're going to be range bound. And what does range bound mean? We got to go back to understand what range bound even looks like. This is what range bound looks like, guys. I think this is what your 2023 trades and investments are going to look like. It's going to look just like this. It's going to look just like from 2018 to 2019. And you can see we were pretty much range bound, right? And you can see we kind of like, boop, we're down, we're up, boop, we're down, we're up, boop, nope, we're back down. Oh no, we're back up. Boop, we're down. Nope, we're back up until we get through probably an entire year of this foolishness. And then I think we break out back to the upside. And then we hit a pandemic, drop, and then we broke back up to the upside. So if we didn't have the pandemic, this would be the trajectory we were on, which looks about right to the trajectory that we were on before. Why is that about the right trajectory? Because long term, the market goes higher. We don't just sit here and I mean, take 9/11. They flew airplanes. We were literally attacked. They flew airplanes into the biggest financial district, shipping area, which is New York. I mean, you name it, New York is like the hub. They flew airplanes. They hijacked planes. They killed people. People didn't want to fly again. Okay. We emerged from that. Stock market went higher. We had the '08 real estate crash or whatever. And the collapse of all the banks. We emerged from that. Real estate rebounded. The economy went higher. We had a pandemic. The entire world was locked down. We emerged from that. Stock market went higher. Now, you guys think, do you really think the Fed raising interest rates is the end of the investment world? Really? We survived the pandemic. We survived banks collapsing. We survived real estate collapsing, people walking away from their house. We survived polio. We survived, you name it, the Great Depression. So this is only going to be a blip on the radar when we look back. Pandemic was a blip, only lasted a year. This whole inflation stuff probably lasts another year. And then boom, it's a blip on the radar. And then I think we eventually go higher. Question is, what is the range that we're going to play in, right? So Siva says, so where does that range exist if we go sideways, in your opinion? Well, let's take a look at the charts. Let's take a look at the charts because we may already be entering that range. You don't really know that you're entering that range until you're in it. Let me explain. Let me explain for non-technicians. If you look at this back here, we were in an uptrend, right? You get a pullback uptrend. You didn't realize you were in a sideways range until you looked up and said, holy cow, we're just going sideways. Boom. So you look up, boom, you're in a sideways channel. Let me show you again. We're in an uptrend. And then you look up and you realize we're not going up anymore. We're going sideways. So the trends blend. They blend. I believe you're going to look over here and say, wait a minute, we're falling, falling, falling. But then you're going to look up and realize, you're going to look up and I think you're going to realize that we might already be in a sideways trend. Man, get this stuff off my chart. Hold on. What is this? What is this in my way? Okay. You might look up and realize we already may be starting that sideways trend. So let me zoom in and make it bigger. I just wanted to show you big picture there. Let's zoom back out and make it bigger. Right? So here you have the great sell-off, so to speak, but really we just returned to normal, basically. Okay. But inside that normalcy, what you'll see is we may already be starting to go sideways because you can see the trend within the trend. Boom. Boom. Right? So we may already be starting the sideways trend. So the range could be anywhere from 3,500 up to 4,100, right? So you got this 600-point range that we could just live in for the next year. We could go back up, then we get smacked down, and we go back up. Oh, smacked down. So that is the range that as we look out on the 2023, that's the range that I would be looking to buy and sell in. The closer that we're down to 37, 36, 35 is where I'd be considering putting money to work. Unless there's always an asterisk, unless we get some new information. Meaning, Russia, Ukraine, tensions worsen. They pull us into the war. The pandemic resurges with an outbreak. I mean, anything could happen, right? News, life, information changes the situations. But I think that's the range that we live in as we go into 2023. And I think you got to look at your buys and your sales based off that. So let's get into some individual stocks. What stocks you guys want to look at? What stocks you want to talk about? Let me take a look at Tesla. I don't know if Nicole is still here. Nicole said, curious about your thoughts on Tesla right now. So we can take a updated live look at Tesla right now. And then anybody else got stocks they want to see or things we want to discuss? Let's talk about it because I have, let me see, how long do I have? Oh, I only got 4 minutes before I got to jump off and jump on another call. All right, let's do it. Let's do it rapid fire. By the way, take a look at the YouTube channel here. I did 2 videos on Teslas that you guys can see here. All right. We did a video right here on Tesla. And then I did another one right here on Tesla. So go check both of those out to see what my thoughts were on Tesla. But let's pull up Tesla right here, right now. The good news is Tesla had at least 2-3 days of a bounce. But the bad news is this, is that even though Tesla had 2-3 days of a bounce, they had 2-3 days of a bounce here. They had 2-3 days of a bounce here, here. And so we have it again, but I don't know that I trust it because all we did was roll over, roll over, roll over. And in that video, what I talked about with Tesla, guys, is until we get a CEO for Twitter and until Elon Musk stops selling his shares, this stock is probably going to continue to tank. But as soon as he finds a CEO for Twitter, stock's probably going to take off. And then he may be the greatest pimp of all time, because if he could sell his shares up here at 300, 220, and then come back in and buy them at around 100 and ride the gravy train back up, that's going to be a baller move. I don't know if that's his plan. I'm going to do a third video about that, but I wonder if that's part of his plan. That would be very interesting. Let's take a look at Amazon. Amazon, this is one of my favorite stocks. I like Amazon down here. It's trying to build a little bit of a floor of support. It did break down below that, but it's not really like in a major sell-off. So I like Amazon right here. If you snap a line straight across, you kind of got this support level of Amazon that you can see here, here, here. And we're basically right around that support level. So I like the stock right here, right now. Long term, I think it goes higher. It got hammered with the rest of tech. But if you think about it, this was your pandemic boom. And then if you come back here to March of 2020, we are back down here to where it was before. Well, this was before the pandemic. And then this was the pandemic drop. So we are back down to the prices as if the world and the economy was closed. So to me, that doesn't make sense. It's not like it's doing worse than when the economy in the world was closed. Let's look at 2 more, and then I ran right up into my call, which I got at 1:30, guys. Let's look at MasterCard. MasterCard here is, I think MasterCard is at resistance for right now. If you snap a couple lines right across, you can see where the resistance kind of runs through this thing up here. And then you can see a decent level of support down here, even though it fell out of it. So if I was going to be bullish, I'd be bullish down here around 308, 304. Up here, I'd be waiting for the other shoe to drop. Plus, you got earnings coming. You got a month before earnings get here. But that's what I would see on that. Let's look at LCID. I'm just going to try to take one. And then it's 3 o'clock. All right. Lucid, garbage. That's my take on Lucid. Big downtrend. I'm not really sure what's going to turn that around. So Lucid, long-term trend, it's horrible. It's down. And remember, guys, the closer a stock gets to 0, the closer it is to going out of business. So when stocks start going almost under $5, I don't like it. We'll take the last 2, QQQQQ. Triple Qs, kind of doing what I thought it was supposed to do, because remember, tech already sold off. Remember, tech had a nice run up through the pandemic, and now it's back down here to reality. I think tech builds a floor right here. Remember, tech can always lay people off or come up with some new technology to reduce costs, as well as drive consumer demand, as well as drive enterprise demand. So tech always has like an ace in the hole. No one ever said we don't need technology, we don't need faster computers, faster internet servers. This industry or sector is going down to the ground, right? They always find a way to come back. I mean, and just to prove that point, zoom out. If you look at tech, tech always finds a way to win. That's going to be no different because it typically always gets better. It doesn't get worse. All right. So thank you guys for hanging out with me. I actually have to jump on another call, but let me know in the comments. What do you think about our analysis of 2023 and what stocks are you looking at? Let's keep the conversation going in the comments. And then remember, in January, we're kicking off our 4-week foundations live training course where we're going to walk you through technical analysis, fundamental analysis, how to get your first stocks for free, what stocks to look at in 2023 and which ones to buy, which ones to sell. That all kicks off the first week in January. And if there's anything I can do to support you, help you on your trading journey, let me know in the comments. And I'm signing off from saying you never go broke, taking a profit. Happy New Year's. And thanks for hanging out with me.